Hey everyone, welcome back to Corporate Decoder, the place where we dig into the nitty-gritty of company reports. Today we're diving into FG merger to Corp, and let me tell you, this one's interesting. It's like they're waiting for something big to happen, like a plot twist in a movie. But is it going to be a blockbuster or a flop? Let's find out. So FG Merger 2 Corp is basically a blank check company. That means they were created to find another company to merge with, acquire, or do some other kind of business combination. They haven't actually started doing anything yet. Their whole existence so far has been about getting ready to find that mystery company. They want to focus on businesses in the financial services industry, meaning they're looking to buy or merge with a bank, insurance company, or something similar. They're a young company, so they're facing all the usual challenges that come with being new to the game. To even get started, they need to get money. They plan to do this through something called an initial public offering, or IPO. It's when they offer shares of their company to the public for the first time. They're hoping to get enough cash to finally make a deal happen. They also have plans to sell warrants, which are like options to buy stock later. If they can't get this money, it's game over. These units we mentioned, each one includes a share of stock and a right. A right lets you convert it into a tiny fraction of a share. So a bunch of rights make a share. It's like collecting puzzle pieces. The company's founders got a big chunk of stock for a relatively small amount of money. This stock has some restrictions on it. They can't just sell it whenever they want. These founders have agreed to vote in favor of a business deal. So they are aligned to make something happen. They gave out more stock to existing owners. This doesn't cost anyone anything directly, but it does spread the ownership a little thinner. It is like slicing a pie into more pieces. The goal is to get listed on the Nasdaq stock exchange. To complete the business combination, they have to buy a target company worth at least 80% of the money they have in their trust account. This is to ensure they buy something of significant value. Speaking of the trust account, almost all the money they raise in the IPO will be stashed away in a trust. It can only be used to complete a business deal or if they fail to give the money back to the investors. That's the key thing to know about these types of special purpose acquisition companies, or SPACs. The people running the show have promised to vote their shares in favor of a business combination. Their interests are aligned with getting a deal done. However, they can get distributions from the trust account with respect to any public shares. So it is not complete alignment. Time is of the essence. They have 2 years to find a target and complete a deal. If they can't, the company shuts down and the public investors get their money back from the trust account. Keep in mind that many of the things I am discussing are forward-looking. There are many things that could affect them achieving their business plans. Now, for some potential problems, like any company, FG Merger 2 Corp faces risks. However, being a blank check company is unique. They face a lot of competition for good target companies. Plus, if too many investors decide to pull their money out, it could leave the company with too little cash to actually complete a deal. Since the company's activities to date has solely been to create the offering and does not have much assets and operation, they don't think they face significant cybersecurity threats and do not have a formal security risk management program. If they do get hacked, there could be damage consequences to their business. They don't have fancy real estate. They lease office space from their sponsor. This keeps their costs low. Don't expect any dividends. They aren't planning on paying out any cash to shareholders anytime soon. They need that money for acquisitions. For the past year, the company lost about $26,000. This primarily consists of audit expenses and administrative expenses. For now, they are burning cash. As of the end of last year, they had very little cash on hand. They've been relying on loans from their sponsor. They need to complete the IPO to get real money. The underwriter will receive a big fee for helping them with the IPO, equal to almost $1 million. So before they make any acquisition decision, the underwriter will be first in line to be paid. The company will pay the sponsor $15,000 per month for administrative services. This covers things like office space and support staff. It's a steady stream of cash going to the sponsor, regardless of whether they find a target company. They state that their accounting methods and fair value of their assets are appropriate. All companies say that, but it is still important to note. The board is divided into classes with directors serving staggered 3-year terms. This structure can make it harder to quickly change the direction of the company. They say that most of their board members are independent, meaning they aren't directly tied to the company's management. This is supposed to provide some oversight and prevent conflicts of interest. They've created committees to oversee things like financial reporting, executive compensation, and corporate governance. This is standard practice for public companies. They have senior advisors to help them find deals. These advisors aren't company employees, but they get paid to help them find a target company. They have a code of ethics for their directors and officers, which is required for public companies. The company insiders, the people running the company, own a significant chunk of the stock, the implication being that they have a vested interest in the company doing well, at least to some degree. It's important to know that the company's officers and directors might have other business interests that could compete with FG merger to Corp. They aren't required to work only for this company. The company's legal documents allow their officers and directors to pursue other business ventures even if they compete with FG merger to Corp. This could create conflicts of interest. They've agreed to protect their officers and directors from certain lawsuits. This could make it less likely that stockholders will sue them even if they do something wrong. The company paid their auditor $32,000 for the last year, and all for audit and compliance work. That's pretty standard for a company of this size. The company insiders have agreed to vote their shares in favor of any business deal that management proposes. Now let's talk about the future for this company. FG Merger 2 Corp is a blank check company, meaning it's a high risk, high reward investment. They have potential, but they need to find the right target company and complete a successful business combination. Their strength lies in the experience of their management team. This, along with their alignment of getting a business deal done, may increase the chances of completing a deal. However, they also face significant weaknesses. The company has a limited time to complete a deal. If they don't, investors get their money back. This puts pressure on management to get any deal done rather than a good deal. Also, the heavy reliance on the sponsor to get things done means if the sponsor doesn't deliver, the company is at risk. Overall, I see this company direction as slightly positive given its stated goals and the experience of the management team in the space. The stock price outlook is hard to define, but it is a gamble. If they find a good target, the stock could soar. If they don't, or the market doesn't like the deal, it could crash. Because of all of the above, a reasonable stock price target would be about $9, $11. My final verdict, a cautiously bullish. There's a lot of risk, but there's also a lot of potential upside if they can find the right company to merge with and manage the transition well. But make sure you keep an eye on them. Thanks for watching. If you enjoyed this corporate decoder deep dive, please subscribe, like, and leave a comment. What company should I look at next?